Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate world. Today we're diving into Marathon Petroleum's latest proxy statement. You know, the kind of report that usually puts people to sleep. Well, buckle up because we're going to turn this financial document into a story complete with boardroom, shareholder showdowns, and a peek at executive pay. Think of it as Succession, but with more spreadsheets and less Shakespeare. Or maybe even both. Let's find out. This proxy statement is basically a guide for shareholders about the upcoming annual meeting. It tells them what they'll be voting on, who's running for the board, and how the company is doing overall. Think of it as Cliff's Notes for corporate governance. They are having an annual meeting in late April. If you held stock early March, you are allowed to vote. Let's get right to the numbers. In 2024, Marathon Petroleum raked in $3.4 billion in net income. That's the profit left over after all the bills are paid. Their adjusted earnings before interest, taxes, depreciation, and amortization, or EBITDA, hit $11.3 billion. That's a key number because it shows how well the company is making money from its operations. This metric had a slight decrease compared to the prior years. They spent $10.2 billion on share repurchases and dividends. There's been a bit of a leadership shuffle. Marianne Mannon took over as president and CEO, stepping into the shoes of Michael Hennigan, who became executive chairman. Also, John Surma, the independent chairman, became the lead director. The board of directors are the people that in theory protect the interest of the shareholders, but they really only represent the company. 10 out of 12 are independent, and that demographic diversity stands at 50% of demographic diversity. It seems that Marathon is taking this seriously. They're talking about environmental targets and efforts to lower their carbon footprint, which is important for a company of this scale in 2025. They got an award from the EPA, Environmental Protection Agency, for being energy efficient 5 years running. Now, let's talk about the money, the big bucks, the executive pay. They have 10 guiding principles that say how executive pay is decided. The CEO salary is a mix of things, a little base pay, some annual bonus potential, and a lot of performance-based stock all mixed together. The compensation committee did a risk assessment on their compensation, so that's good. The executive chairman gets a lower base salary and 40% cut to $1 million, and the new president receives a 33% increase to a base of $1.4 million. Here we see that the board is up for some changes. There is something called the declassification amendment, which is about changing up how the board is structured. The board recommends you vote for it. See that word declassify? It basically means to remove levels or secrets. They also want to get rid of something called supermajority provisions. This simply means changing it so that big decisions don't need almost everyone to agree. Just a normal majority is enough. It has 80% approval requirement from all shares outstanding. The board is for it, so this might make voting easier. Someone called John Chavedon has something to say and a request that the board act in good faith. He is for simple voting and is pushing for the simple majority vote, as it could allow a shareholder to block proposals supported by most shareholders but opposed by management. This might make management's lives more complicated. The company is, however, against this proposal as they have their own proposal. The board has a policy applicable to their directors to oversee their securities trading activity to prevent illegal insider trading, so that's good. It seems they have a lot of deals going on with MPLX, their related company, money flowing back and forth for services, products, and general support. That's pretty much how they conduct a significant amount of business. Autry. Now, having sifted through the numbers and the corporate speak, what's the takeaway? Marathon Petroleum seems to be in a strong financial position, but is undergoing significant executive overhaul. This seems like a good step in the right direction and has the chance to really improve shareholder value. Now, they claim to have good risk management practices, but I do see a risk of conflict of interest, although that is mostly unavoidable given the amount of connections and relation that each entity has at sea. I will personally keep an eye on these risks. Should you invest? They are very consistent, but the industry is volatile, so it is important to remember to never invest more than you are ready to lose. Thanks for watching. If you enjoyed this video, please subscribe, like, and comment.